I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we're talking about reverse mortgages. We're going to go through a quick review. But again, this is the Mortgage Brothers show. If you're not subscribed, be sure to do so. Click the like button, and be sure to comment with any questions you have.
Now, I would just start off with reverse. That to us, it seems easy. What is a reverse mortgage? Why is it reverse? It's very simple. It simply is the opposite of what a normal mortgage is, which would be considered forward. So instead of actually paying your loan down, you are allowing the bank to, upsize your mortgage over the years. So reverse mortgage.
That's right. So the reverse mortgages, a lot of people, we're going to go over what they are, what are the requirements, also going to address the pros and cons and the common myths, a lot of the misunderstandings out there that you're hearing from people. And so we're going to go right through that. So stay with us here. I think that again, before we get going, this is for This is for informational purposes only. Right? Tom and I are not giving you financial advice. We're just giving you the information on the reverse mortgage today.
Right.
All right, everybody.
Right. And also, I will say, too, that there's been a huge change in reverse mortgages, over the past, call it 8-9 years. So this is not the old reverse of the old days. This is kind of a new thing as of, again, 8-9 years. Doesn't seem that long, but it is. Yeah. So anyway, this is a new deal.
There's a lot of people out there who had reverse mortgages that were 10 years plus, 15 years ago, they were getting reverse mortgages. A lot of people right now may be in the market to be looking at one. Maybe you're watching this for your parents. Maybe your mom or your dad are getting old, and they are on a fixed income and they need some help.
And I'll also say this too, because I pondered this for months and months and months. What is the right person for a reverse mortgage? They're not for everybody. I think people, just treat it like most things in life, which is, do I want it? Yes or no? And, regardless of what they think they need, they may not need it. The real thing about the reverse mortgage is someone who wants to age in place. We have friends, we have certain members that we each know where it's like the house is really not that special. Why do they have to be there? They don't have to be there. So one of the big things we say is, as you're consulting yourselves and your loved ones, is the house important enough for them to want to age in place? To me, that's a very big thing. It took me months to figure that out. Right. So,
yeah, it makes a lot of sense. And okay, so we'll get right into what are the requirements, at least for the reverse mortgage. You have to be at least 62 years or older. You have to live in it as your primary residence. This can't be your investment property. You must keep current on your taxes and insurance because those can be priority liens. Well, the taxes can be a priority lien. And if your home burns down, the bank needs to be able to replace that home and rebuild it. Mm-hmm. You must keep the home and make sure it's properly maintained, must be in average and good condition. And all borrowers must complete the HUD counseling class that will receive a certificate of completion. It's basically a requirement because 90% of all reverse mortgages are FHA insured, which is through the HUD department. And HUD, it's basically government insurance, requires anybody before they even start the application process for reverse mortgage to take these classes. And it's pretty easy to do. We can always send you a list or basically you call or log in and take a class. Mm-hmm. And they'll do it over the phone.
Right, yeah. Right. And the next point we're going to talk about, and this is one of the biggest changes, over the past 8 or 9 years, which is, there used to be issue and conflict between, spouses or that significant other, living with you. Now you don't, you can be considered a non-borrowing spouse, which is a very, very big deal. So just one of you needs to be, 62 years of age in order to be eligible for this product, which I think is a very big deal. They'll have to sign a disclaimer deed and whatnot, but you both don't have to be on this loan.
Right. Okay. That's really good to know. And then, okay, a non-borrowing spouse, that's, if you have a spouse that's less than 62 years old, they are a non-borrowing spouse. And so they won't be on the note or the deed of trust. Mm-hmm. Okay. So the common pros and cons of the reverse mortgage.
Yeah, well, why don't I go through them? So on the pros, so no mortgage payment. That seems very, very basic. But in addition to the no mortgage payment, you can also have a line of credit that you can build into that. So let's say you want a one-time cash payment, or if you want things monthly, you can get that. But the biggest piece is not having a monthly payment to worry about. Next, the no recourse loan. In the olden days, the bank used to be able, to come back to your heirs if the house after 15 years was sold and you were underwater, and they would be able to collect the difference of what that loan amount was versus what it sold. Now there is no recourse, so that's a huge thing, especially in a market like we're in today, where pricing is so high. It's actually a really, really good time. Come in when the prices are high, and regardless of where the value is going to be, it doesn't matter.
Right.
So FHA will be taking on those risks. That's another reason why the closing costs on reverse mortgage are going to be a little bit higher. It's because it's kind of an insurance program where they're actually saying, regardless of where values are in the future, we are going to ensure that we will not go after you.
And the next one is the credit line. When you if you're going to get a credit line, on the reverse mortgage, it's a predetermined. It actually grows with time. It's a predetermined set rate, and so that rate that it grows cannot be adjusted up or down. So it basically is calculating what future equity would be in the home, but it's a nice way that kind of increases your line over time. And this protects both the borrower, and the lender.
Yeah, and I'll also add this too. So if you were to draw money from the credit line, you can also pay back into it and be able to withdraw it later on. So it's a bit of a revolving credit line, so to speak, which is nice. You're not,
Right.
Required, a one-time withdrawal and that's it. No, you can withdraw it, pay it back.
So just like a regular line of credit, then.
Mm-hmm.
Yeah, you just can pay it back.
Yeah, and that way you're not paying interest.
Right.
You sell a boat, you sell an RV, great. Pay that credit line down.
Good. And then the fees, they can be the closing costs. They can be financed into the loan, so you can basically get the reverse mortgage without the burden of upfront costs.
Yeah. No closing. I mean, there are closing costs, but no cash to close, as we call it, which is a huge deal.
Mm-hmm. So let's just talk about the cons. It's really important that everybody knows what the cons are here. The fees are higher on a reverse mortgage than a typical conventional loan. You go to get a regular, and Tom was saying forward mortgage. I mean, most of the loans out there, 98% of the mortgages, right, are forward amortized. They're amortized forward. The point is that those conventional loans have lower closing costs. Mm-hmm. So due to the higher closing costs, reverse mortgage is not a short-term loan. You don't want to have any kind of financing. You don't want any kind of financing if it's going to have large costs and you're going to pay it off soon. Right,
exactly. And we used to always say, if you need a HECM, this reverse mortgage for a short period of time, what you really probably want is a HELOC. Get that HELOC for 6 to 12 to 18 months. Do not do the HECM if you know it is going to be a short-term, fix for you. Obviously, if life changes and you need to get it refinanced or you need to, redo it, fine. But if you go into it with the intention this is a short term, we would say no.
That's right. So again, it's part of a long-term plan. There's nothing short-term about a reverse mortgage.
Yep.
Now we're going to cover the myths. There's 4 myths that are so common out there. Any of you who are watching probably have heard this before. Number 1, I heard the bank can take my home away from me. Like they basically would own the home.
Right. Yeah. I used to have a house and I did a reverse and I no longer own it anymore.
Yeah.
Right. Boy, isn't that a huge myth?
Yeah. Is that true? No, absolutely not. It's not. You own the home just like you own the home, whether you have a regular conventional loan or a reverse mortgage, you still you have the title, the ownership of the home.
Yeah. I mean, you could even think about it as like a credit card. You could have a credit card with a $20,000 balance, and every month you put, $1,000 on it, $1,000 on it, $1,000 on it. The only thing about a reverse mortgage is that balance is going up, but you still own the credit card, or you still own the home, just like you own your credit card. So you are no way changing how you own your home. That is your home. If it appreciates, you get to keep that appreciation. No one can take it from you.
That's right. The bank is simply putting a lien on your property, just like they would with any other mortgage.
And again, I said it before, it can be refinanced. So just because you do a reverse mortgage doesn't mean that, that's it, all said and done, can't ever refinance again.
Right, right. You can sell. I mean, it's your home to sell if you wanted to sell.
Yeah, totally.
You have all the bank can't say, oh, no, we don't want you to sell or we don't want you to refi. They have enough.
Correct.
They can't tell you what to do.
All the bank wants with your reverse mortgage is, as your mortgage balance is going up, is to get their money back when you decide to sell, or when the reverse comes to an end. That's it. All the banks want is to get their loan back. They do not want your house.
Right. Now, another myth out there is this myth of my heirs will be responsible for repaying the loan. You've already talked about this. It's absolutely not true because reverse mortgages are non-recourse.
Right, the non-recourse, which just simply means somebody, does not have the course to go after you, I guess. So, yeah, there is no way to go to any of your heirs, in the event of a death.
Yeah, right now, what we understand, the general terms are that the bank's going to give you 12 months for the heirs, 12 months to sell the home. If for some reason there's no heirs, let's just say that there was no surviving heirs, the bank would basically have the right to sell that property.
Mm-hmm.
But
yeah, and also consult with the bank. You can ask us, depending upon which bank, they do want to be notified. If the member holding the loan, has become deceased. And just do it soon. Again, the banks are not interested in coming and taking the house. They really want you to initiate conversation with them. So though we say 12 months, it's always a good idea, as soon as you do know, you have things in order with the finances, to reach out to the mortgage company and to let them know what has happened. And they'll begin to work with you on letting you know exactly what needs to happen.
So, right. Okay. So whether you're selling the home, or let's just say that you want nothing to do with it, and the bank somehow takes over and sells your house, your home, the heirs will get the difference between the payoff and whatever they sell the home for. So it isn't like the bank just pockets all the equity.
Mm-hmm.
They get to all they're interested in is paying off the mortgage balance. So it's just like a regular mortgage that if you sold your home, you would have a mortgage balance. They'd sell the home, just pay off the mortgage and give you the proceeds.
That's right.
Now, the good news is that if the sales price, let's just say there's a housing crash, and your home value isn't worth as much as the mortgage balance, the heirs don't, of course, have to pay that loss.
Right.
Okay.
Right.
All right. The myth number 3 is the bank will kick out my spouse if I pass away. So let's just talk about just like we were saying earlier, maybe your wife wasn't on the loan.
Yeah. That's just flat not true. And that's one of the big, changes in the last 8 or 9 years, that if there's a surviving non-borrowing spouse on title and it was disclosed during the underwriting process, so it would have to be disclosed that way. That would be important, that the surviving spouse can continue to remain in that home and receive all the benefits of the reverse, without having to sell. But that was one of the big things. Once there, someone does pass, and again, there can be age deltas between spouses, and so it's very, very common that one would go before the other. So that's a big thing that's been alleviated.
Absolutely. So myth number 4, someone told me that I cannot sell my house. Kind of goes back to what we first said, is you have ownership, right? No, the bank cannot tell you you cannot sell your house. They cannot tell you cannot refinance. You can do whatever you would like. So you can sell your home. You have 100% ownership, and you can do whatever you'd like. Now, of course, it is recommended that you keep the reverse mortgage long-term as a part of your long-term financial plan. But that's up to you to decide.
Speaking of a financial plan too, a lot of, and I say counseling, we will talk with borrowers about different situations, and we're not financial planners, as Eddie had said, but this is something that we can talk with our borrowers about, which is you can actually delay receiving Social Security income by being able to use the HECM as a way to reduce some of your monthly expenses, which is a huge thing. So even though we're not financial planners, we know enough to be able to give little hints and give little tidbits, and that's a big thing about the reverse mortgage.
Right.
Is that it really is a financial tool.
Absolutely. It's something that you can ask us the questions. We can give you some ideas. Maybe you can even go back and talk to your financial advisor about these things that we can mention to you.
Yeah.
But again, the Mortgage Brother. Oh, what's the last slide here? We're
All right.
yeah.
So the eligible properties. So single-family homes, townhomes, condos, and manufactured homes are allowed. A lot of people don't think manufactured homes are allowed. Manufactured homes are probably the most difficult to do. They are eligible. So we would just want to talk through exactly, what your manufactured home is, some of those specifics.
Yep. All right. And everybody, the Mortgage Brothers team, Tom and I, we're located right here in Phoenix, Arizona. You can always Google us. Just Google Mortgage Brothers team. You can read our reviews, see our contact information. In the description, we also have that as well. Again, be sure to subscribe and like, and hope everyone takes care.
All right. Hey, thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.